Right. Let's unpack this. We are diving into something that really demands your attention, the concept of real wealth and what happens to your money when currency, starts to fail.
Mm-mm.
If you just look at the track record of the US dollar, it lost a staggering 33% of its value in just 12 years.
Yeah, between 2000 and 2012, that kind of drop, well, it's a huge sign that you need some kind of insurance policy.
Exactly, an insurance policy. And if you track what happened during that exact same period, you see the response.
Oh, you do. Gold wasn't just holding steady, it soared. It climbed from below $300 an ounce to over 1790.
So this deep dive, it isn't really about promoting one asset over another. It's more about understanding why.
Exactly. Why do gold and silver perform as this ultimate financial defense when governments mismanage their finances?
Right. So our mission today is a kind of a rigorous exploration of precious metals, not as, historical curiosities, but as vital financial hedges.
And our sources have some very passionate arguments on this. So we're really focused on extracting the mechanisms behind it all.
The fundamental role, the different forms, physical versus paper, and probably most importantly, the practical steps. How to buy, sell, and store them safely.
We'll start with the why, the historical reason gold is just different from paper money. Then we'll get into the what, the specific forms of ownership.
And finish with the how, covering everything from secure storage to finding a trusted partner, especially if you're looking for local support.
Let's do it.
So let's start at the beginning. Why does gold hold its value when, everything else seems to be declining over time? What gives it that special quality?
Well, it really boils down to what economists call the inherent characteristics of money. I mean, gold is divisible, it's portable, it's incredibly lasting.
Never degrades.
Never. And it's consistent. But the single most important thing, the one thing to remember, is scarcity.
A government can't just print more of it.
They can't just create it out of thin air. It's a finite asset. It takes real effort to acquire it.
That really makes paper money sound incredibly fragile by comparison. And the history here is just fascinating. This isn't a new problem.
Not at all. The problem of bad money driving out good money, Gresham's law, it's centuries old. I mean, back in 1751, the King of England got so fed up with the instability of paper currency.
He just outlawed it.
He outlawed any money not backed directly by gold or silver. He saw that the metal had this intrinsic stability.
And we saw that same thing in the U.S. colonies, right? The Spanish silver coins, the ones people trusted, they just vanished from circulation.
He did. As soon as artificially inflated paper money started showing up, people hoarded the good stuff, the silver. We saw the exact same thing again in the 1960s with the U.S. silver dollar.
Right, because the silver in the coin became worth more than the face value of the coin itself.
Precisely. So
Yeah.
people started pulling them out of circulation to hoard them. The fiat dollar had just declined too much. That's the long-term history that gold is built on.
So if we bring that into today's world, what does that trend tell us about holding cash right now?
It tells us that the real return on cash, which you get after you subtract inflation, is negative.
So your money is actively losing purchasing power just by sitting in the bank.
Yes. And this happened in the 1970s, which is exactly why that decade saw a huge explosion in the price of gold. Investors see it as crisis insurance.
It really changes your perspective, doesn't it? You mentioned that some smart investors actually wish their gold would fall in value.
They do. It sounds like a paradox, but it makes sense. You buy homeowners insurance hoping your house never burns down.
You never want to have to collect on it.
Right. Gold is there to protect you against a catastrophic currency failure. You hope you never need it to skyrocket because that means things have gone very, very wrong.
That brings up a great point about volatility. There's this contrast between gold and silver. Why does gold get criticized for being so, stable?
Well, that criticism usually comes from the idea that the gold market doesn't always trade like a classic free market.
You mean it's being manipulated?
Some sources argue that, yes, over a 10-year span, gold moved more than 5% on only 10 occasions. For some, that low volatility is a sign of suppression in the paper futures markets.
So the paper market for gold that doesn't really exist is overwhelming the price for the physical stuff.
That's the argument. And it just doesn't happen with silver to the same degree. Silver is way more volatile.
How much more?
In that same 10-year period, silver moved by more than 5% 80 times. 80.
Wow. And why is that?
Two reasons, really. A much smaller market and critically massive industrial demand. We're talking 500 million ounces a year, used in everything from solar panels to electronics.
So it's both a monetary metal and a high-demand commodity.
Exactly. It has two worlds pulling at it.
Okay, now that we get the rationale, let's move to the what. You said physical gold should be the foundation. So what are the best forms to actually buy?
We always say start with physical, sovereign minted bullion coins. The U.S. Gold Eagle is, the most widely recognized and traded coin on the planet.
But for the investor who's worried about the ultimate insurance scenario, government confiscation, there's a specific historical coin that offers an edge, right?
Yes, you're talking about the $20 St. Gaudens Double Eagle, specifically in brilliant uncirculated condition, or BU Saints.
Why are these pre-1933 coins a better hedge than a modern eagle?
It all goes back to the 1933 gold confiscation, Executive Order 6102. That order had exemptions.
What were they?
It exempted gold coins having a recognized special value to collectors and, this is key, gold jewelry. The BU Saints are considered historical collectibles, which historically gave them that exemption.
So it's a kind of plausible deniability. You own a collectible coin, not just a lump of bullion. And speaking of that jewelry exemption, I thought it was brilliant how some dealers created 24-karat gold jewelry measured in ounces.
It's a really clever strategy. You get the 99.99% pure metal, but in a form factor wearable jewelry that historically had specific legal protection. It costs a bit more, but for some, that confiscation insurance is worth it.
But let's be real. Physical gold is heavy, storage can be a headache, and it's not instantly liquid. So for a lot of people, the one-click paper options are essential.
They absolutely are. The most popular is probably the gold ETF, like SPDR Gold Shares, ticker GLD. You own shares in a trust that holds the physical bullion for you.
Right, it solves the storage hassle. But we can't ignore the massive strategic difference the tax code makes here. This is where you have to be really careful.
Indeed. This is a big one. It's where a lot of investors get tripped up. When you sell an ETF, like GLD, the IRS generally classifies it as a collectible, even though it's a security.
And that means a much higher tax rate.
A much higher 28% rate. That's a steep tax on your long-term profits.
So if your goal is gold exposure, without that huge tax hit, you have to pivot to the mining sector.
That's where funds like the Gold Miners Fund, GDX, come in. You're buying shares in the companies that produce the gold, not the metal itself.
And the IRS treats those as regular stocks.
Exactly, which means they're taxed at the much lower 15% long-term capital gains rate. For a taxable account, that choice can save you a lot of money.
What's really bizarre, though, is the IRA treatment. If GLD is a collectible taxed at 28%, why can you even put it in a retirement account?
It's one of those weird exceptions the IRS makes. You usually can't hold collectibles in an IRA, but they allow these gold ETFs. So that's the ultimate strategy. You use a retirement wrapper to protect those profits from the tax entirely.
Okay, so that's protecting your profits. Let's talk about protecting the physical principal. Because once you hold a decent amount of gold, security becomes a real concern.
It does, and protecting it requires discipline. Just hiding it in a jewelry box or a cookie jar. That's amateur hour.
The first place a burglar looks.
The very first place. And that doesn't even account for fire or flood.
So what are the smarter home solutions?
Well, bolting a high-quality safe like a Sentry to the floor is a good step. But you have to conceal it well. For really serious security, some people even bury their assets in airtight, waterproof containers, like PVC pipe.
What about a safe deposit box at a bank?
They're convenient, but they have major drawbacks. They're inaccessible on holidays or during a real crisis, which is exactly when you might need your insurance.
And they're not insured by the FDIC.
Right, and the bank's own insurance limits are often shockingly low. You'd have to buy a separate policy.
That's a level of detail you won't get online. Let's talk about counterfeiting. That seems like a massive risk with physical bars.
It's a huge threat. The main concern is tungsten filling. Tungsten has almost the exact same mass as gold, so it's very hard to spot just by weight.
They drill out the bar and fill it.
Drill it out, fill the void with tungsten, and then cap it off. With smaller coins from private mints, it's often a tungsten core with gold plating. Trust is just everything.
Which brings us perfectly to the critical importance of local, verified expertise, especially when you're dealing with something high value and non-standard.
Absolutely. The world of gems and metals has a dark side. You need assurance. Reputable jewelers rely on certifications GIA, IGI to confirm the quality.
And they have equipment that the average person just doesn't, right?
Exactly. Like an ASET scope for diamonds. It lets an expert see exactly how a stone is handling light. You just don't get that level of inspection from some faceless online retailer.
And that personalized service is huge. You can walk into a local shop, view multiple items side by side, talk about aftercare, like free cleaning. That relationship is invaluable.
It also helps shift the conversation. An online buyer might focus on rarity they can't even see, like VVS clarity. But a local expert can guide you toward the beauty you can appreciate, the setting, the craftsmanship.
So if you're looking for that kind of trusted partner to help you navigate this, whether it's for crisis insurance or you have pieces of gold, silver, or luxury watches you want to sell, we do want to highlight our sponsor, Allen Gold and Silver Exchange. They're a top trusted jewelry buyer and seller in the Texas area, offering expert appraisals on diamonds, antique jewelry, coins, and metals. They have fantastic 5-star reviews. You can call them at 469-403-8356.
So when it's time to actually sell, you enter this final strategic phase. And it really involves a trade-off between convenience, speed, and price.
Let's break that down, starting with the local coin shop. What are the pros and cons there?
The pros are speed and convenience. You get cash right away, no shipping, and you can sell small amounts. The major con is you might get a lower price. Dealers buy based on what they need.
So if they're overstocked on silver eagles, they might not offer you a great price.
Exactly. They might only offer a couple of bucks over the spot price because they just don't need them, and that really limits your profit.
Got it. Now, what about an online bullion dealer?
Well, online you can often lock in a better price because their overhead is lower. But there are caveats. There's often a minimum transaction, say $1,000, and there's a serious time delay.
Right, you have to ship it, wait for them to verify it.
And you're paying for secure shipping, like USPS registered mail. Then payment is only issued 1 to 3 business days after they receive and verify it. You trade immediate cash for a higher potential payout.
Which is why that local partner is so valuable. If you need money now or you have diverse pieces that need a complex valuation, a local partner gives you that immediate cash in a personalized experience.
The relationship fosters security. You're not just a number in a queue.
And as a reminder, Allen Gold and Silver Exchange understands that. They are ready to buy, sell, or even trade your precious metals, coins, and luxury watches. Again, their number is 469-403-8356.
So as we wrap up, we have to talk about the long view. If you hold gold for years, what's the signal that the bull market is finally over?
The classic historical signal is when everybody is in. It's not just the experts anymore. It's when everyone you know is suddenly a gold expert bragging about their profits.
Peak enthusiasm. And there's a fantastic anecdote from the 1980 gold peak that shows this perfectly. At a gold buying service in New York, the lines were massive.
How massive?
3-hour wait times. They had to hire a security guard just to manage the crowds of people selling old gold trinkets they'd forgotten they even owned.
When people are rushing to sell their old jewelry like that, that's your sign.
That is your definitive sign that the market has gotten too popular. The peak may be very, very near.
Okay, let's summarize the key takeaways for you, the learner, so you can apply this.
First, physical gold is the foundation. Think modern bullion coins or the historically protected BU St. Gaudens as your primary holding.
Second, be a smart strategist with your paper assets. Know the tax difference. GLD has a high 28% tax rate, but you can put it in an IRA. GDX stocks have the lower 15% rate.
Third, be meticulous about safety. Physical gold demands more than a cookie jar. Think secure safes, insurance limits, and being hyper-aware of counterfeiting risks like tungsten.
And fourth, never rely on an anonymous click-click experience for high-value items. A local trusted expert who provides specialized services and relationship-based care is just invaluable.
We really encourage you to reach out to a trusted local expert to appraise your holdings, whether it's antique jewelry, gems, gold, or luxury watches. Allen Gold and Silver Exchange does all of this. Call them at 469-403-8356.
And finally, we'll leave you with this provocative thought to tie it all together. Back in 1934, when President Roosevelt changed the price of gold, he devalued the dollar by 69% overnight. Given that the 1933 confiscation specifically exempted jewelry, does owning 24-karat gold jewelry today provide a unique dual-layer protection shielding your asset from both currency devaluation and potential future government policy? Something to think about as you build your own path to real wealth.